This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Portfolio investors had reverted to a broadly neutral position in petroleum last week after heavy selling triggered by the OPEC Plus meeting at the start of June waned and buying took over. Hedge funds and other money managers purchased the equivalent of 56 million barrels in the 6 most important futures and options and contracts over the 7 days ending on July 2. Fund managers have been net buyers in each of the last 4 weeks, purchasing a total of 316 million barrels since June 4, according to exchange and regulatory records.
Global oil demand will outpace supply next year, the U.S. Energy Information Administration said on Tuesday, reversing a prior forecast for a surplus. The change came after OPEC and its allies, collectively known as OPEC Plus, extended most of their deep oil output cuts into next year at a meeting last month. The producer group has been restricting output since late 2022 to shore up oil markets in the face of weakening demand growth, high interest rates and record U.S. output. If the market goes into a deficit, refiners will need to drain oil from inventories to meet demand.
Moving on to the top news in the energy sector.
India plans to spend $1 billion to expedite the construction of 12 hydropower stations in the northeastern Himalayan state of Arunachal Pradesh, 2 government sources said, a move that could raise tensions with China that lays claims to the region. The Federal Finance Ministry under Nirmala Sitharaman recently approved up to 7.5 billion rupees, $89.85 million, in financial assistance to each hydropower project in the northeastern region, the sources said. Under the scheme, about 90 billion rupees will likely be allotted for the 12 hydropower projects in Arunachal Pradesh, said the sources, who have direct knowledge of the matter.
China's industry ministry issued draft rules on Tuesday tightening investment regulations for solar photovoltaic (PV) manufacturing projects as it looks to pare back overcapacity. Projects will need to have a minimum capital ratio of 30% under the new rules. Previously, that minimum applied to polysilicon manufacturing projects while the minimum for other PV projects was 20%. The ministry did not provide a definition of the ratio, which typically refers to the percentage of total investment shareholders invest with their own assets. The regulations also lay out minimum efficiency levels for different types of solar panel technologies. Next, we have the top news in metal markets. The prices of copper and most other base metals fell on Wednesday after China's inflation data disappointed and as a firmer U.S. dollar weighed. 3-month copper on the London Metal Exchange slid 0.6% at $9,812.50 per metric ton by 0555 GMT, while the most traded August copper contract on the Shanghai Futures Exchange fell 1% to 79,510 yuan, $10,928.31 a ton. China's consumer prices grew for a 5th month in June but missed expectations, while producer price deflation persisted.
Steel prices in China fell to a more than 3-month low on Wednesday, hurt by poor demand due to a weak construction sector in the world's biggest consumer of the metal alloy. Rebar on the Shanghai Futures Exchange fell as much as 0.8% to 3,483 yuan, $478.73 a metric ton, the lowest since April 8. The contract was down 0.7% by the midday break. Latest data from China showed domestic demand continued to recover at a slow pace, and construction data showed double-digit percentage fall in the first 5 months of the year.
We will now look at the top news in the agricultural sector.
Russia has become the top exporter of peas to China, accounting for almost half of the country's total imports and overtaking Canada in less than 2 years after gaining access to the $1 billion market, Russia's Union of Grain Exporters said on Tuesday. The union's data shows Russia exported 1.13 million tons of peas to China in the 2023-24 agricultural season, gaining a 49.1% market share. Canada's share fell to 44.6%, from a dominant position of about 95% of China's pea imports in previous years. The latest export data shows how quickly Russia is gaining a larger share of the agricultural products import market in China, especially amid simmering trade tensions between China and Western countries.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.